Should you rent or should you buy? That is the question, and we'll have answers in this video right after this. Hi, my name is Lei Villar-Cisneros, your real estate go-to resource in the Greater Toronto area, and I post videos every Thursday about all things Toronto and real estate. And if this is your first time tuning into this channel, subscribe to the channel now and don't forget to hit the bell so you will be notified when a new video is uploaded. If you have questions about moving in the Greater Toronto area, call us, text, or email us, whatever works for you, and we'll make sure that your moving experience is a breeze. Today we'll talk about this ongoing debate about should you buy or should you rent. The short answer to that question is it all depends in each individual circumstances. So let's dive deeper and let's analyze your current situation. Number one, does your work or your lifestyle require you to be on the road most of the time? If your answer is yes to this question, then you will be better off renting a property. Number two, can you commit long term? Buying a home is like marrying someone. For better or worse, in other words, this is for the long haul. If you cannot answer yes to that question, then renting is a better route for you. Number three, do you like to splurge on yourself? Do you sometimes spend on something that you cannot afford? Do you owe a lot of debts? If this is your scenario, then you will be better off renting, because it doesn't make sense to be getting another debt when you cannot pay your current responsibilities. Number four, do you have enough savings for your down payment and closing costs, and also for some rainy days? If your answer is no, then renting is better for you. Well, we cannot finish this analysis without looking at the financials. First, we'll look at the upfront cost, then the ongoing cost, and the end of term. So for this analysis, we will be looking at the latest MLS system numbers posted as of September 29, 2020. Looking at these figures, we could see that the average rental at this time is somewhere in the neighborhood of $2,000. Now, looking at the sales statistics, the most recent sales in the one-bedroom apartment in the city of Toronto, particularly the waterfront communities, is somewhere around the $600,000, give or take. So we will use these numbers for our analysis. Now let's look at the upfront cost. In order for you to rent a one-bedroom condo apartment in downtown Toronto, you will need a first and last month deposit. So if we are renting for $2,000, so that will come up to $4,000 upfront. Now you would also be required a condo insurance, which will be somewhere around $30 a month. Now let's look at the buy side. To buy a $600,000 property in downtown Toronto, you will need a minimum of $35,000 for down payment. That is the equivalent of 5% for the first $500,000 and 10% for the remaining amount. From $600,000 purchase price, we will subtract the down payment of $35,000. So that will bring our loan mortgage amount to $565,000. And because we are buying with a minimum down payment, we will be required a mortgage default insurance. For this example, the mortgage default insurance is equivalent to 4% of the loan amount. So we will add that loan amount and the mortgage insurance to our mortgage. If you buy a property anywhere in Canada, you are going to pay for a land transfer tax. The land transfer tax for a $600,000 property is equivalent to 8,475. Now, if you're buying a home anywhere in the Toronto area, you will be paying an extra municipal land transfer tax, which is also equivalent to 8,475. The good thing is, if you are a first-time home buyer, there is a rebate of equivalent to 8,475. So the total net land transfer tax to you will be $8,475. Now, on top of the 4% mortgage default insurance that we just paid, which was equivalent to $22,600, we will be paying a provincial sales tax or PST equivalent to 8% of the mortgage default insurance, and that will be about $1,808. And then we will be paying legal fee, title insurance, and whatever disbursement. So let's assume that that amount is equivalent to $1,800. A home inspection for a one-bedroom condo in Toronto with the tax, let's assume that the total amount will be equivalent to $400. Total upfront cost is equivalent to $47,483. Now, let's look at the ongoing cost. For renting, the only ongoing cost you have will be your renter's insurance, which is approximately about $30 for. And if the utilities are not included in the maintenance fee, then you will have to pay for that, somewhere around $100 a month. Now, let's go to the buy side. The ongoing cost for a buy side is you will have property tax. Based from the figure that we've seen earlier, the property tax for 600 to 699 square feet condo is approximately around $2,400, or that's equivalent to $200 per month. If it's a brand new condo, we will assume a 1% of the purchase price. Now, for the maintenance, if we look at the figure earlier, it is somewhere in the vicinity of $400 a month. Now, if the condo that you bought does not include the utilities in the condo fee, you will also have to pay for the utilities. You will also pay for a condo home insurance. So let's put that at $50 per month. Now, you will also have some maintenance for your home in order to keep it at a pristine condition. So let's assume $500 per month. Now, if you're renting and the appliances broke down or the toilet gets clogged up, you just call your landlord. It will be free for you. Going back to the buy side, the ongoing monthly cost for you is about $3,730 per month. Now, putting this together, your rental ongoing monthly cost will be about $2,130. If you subtract the ongoing costs from the buy side to the rental side, you will still have about $600 remaining if you are renting a property. So if you put your $1,600 a month on an investment, and let's say after inflation you get 3% net for 5 years, compounding monthly, you will have about $104,000 in the bank. Going back to the buy side, so out of the $3,730 per month that you're putting in for your ongoing costs and your mortgage, only $1,500 per month will be left and saved as your principal. Fast forward 5 years and you will have about $95,000 in equity. Now, as we say, we wanted to cash in on the money at 5 years. Now, let's look at the rental. So, you will have about $103,000 in savings. But you have to subtract whatever tax that is owing on that investment. We say that real estate goes up in value 5% every year. That will translate into $804,057 home value. We said that our balance after 5 years in the mortgage is $492,234. Let's say that we are selling the house. So with the realtor fee, taxes, and legal, we will end up with $264,894. But here's the kicker. That money, if you stayed in your house for that 5 years and live in that property, that will be tax-free. Now that you know everything you need to know about buying or renting, it's up to you to decide whether buying or renting is for you. And if you decide to buy a property, check out my other video about the home buying process where I talk about the 10 steps in buying a home. And let's go and watch that now together. If you need to buy a home in the Greater Toronto Area, call us, text, or email us, whatever works for you, and we'll make sure that your moving experience is a breeze. My name is Lei Villar-Cisneros with Right at Home Realty, and we'll see you next Thursday for another video about Toronto and its real estate. Bye for now. Don't forget to share.